Looking for a pharmaceutical giant to invest in? Wondering which one might be your best investment choice right now? Want to see two world-class pharmaceutical stocks pitted up against each other to see who comes out on top? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. High quality dividend growth stocks tend to be fantastic long-term investments. After all, it takes a special kind of business to be able to pay out ever larger dividends for years on end. So it shouldn't be a surprise to see that many high quality dividend growth stocks represent equity in world-class businesses. These are truly some of the greatest companies in the world, but there are degrees of greatness, and some companies, while great, might be not quite as great as some other companies. Today, I'm gonna pit two great dividend growth stocks up against one another. It's Bristol-Myers Squibb versus Amgen. Seeing which one comes out on top could reveal the better long-term investment. Ready? Let's dig in. Bristol-Myers Squibb Co, stock ticker BMY, is a global biopharmaceutical company with a market cap of $149 billion. Amgen Inc., stock ticker AMGN, is a global biotechnology company with a market cap of $138 billion. They're not exactly the same business, but they're both major drug companies with similar market caps. And I'm going to pit them up against each other in 3 head-to-head rounds. The first round will be fundamentals. The second round will be qualitative aspects like competitive advantages and risks. The third and final round will be valuation. Whoever wins the most rounds wins the battle. Regarding fundamentals, we're going to take a look at dividend metrics, business growth, profitability, and balance sheet strength. Who's got the better fundamentals, Amgen or Bristol-Myers Squibb? Let's find out. First, dividend metrics. They both have the same yield at right about 2.9%. They've also both been increasing their dividends for almost the same exact length of time, 12 years for Bristol-Myers Squibb versus 11 years for Amgen. Amgen, however, has the much higher 5-year dividend growth rate, 15.2%, compared to Bristol-Myers Squibb's 4%. While Bristol-Myers Squibb's most recent dividend increase of almost 9% shows a nice acceleration in dividend growth, Amgen's most recent dividend raise of 10% was even higher. Bristol-Myers Squibb has the lower payout ratio based on adjusted earnings per share, but Amgen's payout ratio looks even better on straight GAAP numbers. I'm gonna give Amgen the very slight edge on the dividend here, based purely on a more consistent and higher dividend growth rate. Moving on to business growth, Amgen squeaks out another small victory. Bristol-Myers Squibb has compounded its earnings per share at an annual rate of 12.91% over the last decade, and that's even after using a more favorable adjusted earnings per share number for fiscal year 2020. On the other hand, Amgen still beats them even on a pure GAAP basis with a 10-year earnings per share compound annual growth rate of 13.18%. Bristol-Myers Squibb does have more revenue growth, but that's because of its massive Celgene acquisition. Amgen is simply growing faster as a business, which is why the dividend has also grown faster. Amgen is starting to pull ahead. But what about profitability? Over the last 5 years, Amgen has averaged annual net margin of 28.15% and annual return on equity of 42.89%. Over the last 5 years, Bristol-Myers Squibb has averaged annual net margin of 10.72% and annual return on equity of 16.07%. Amgen crushes them here. Both are highly profitable and impressive enterprises, but Amgen is more so. That said, I give the balance sheet strength to Bristol-Myers Squibb. Their long-term debt to equity ratio of 1.28 beats Amgen's 3.5, and their interest coverage ratio in fiscal year 2018, the last full year before the Celgene acquisition, was over 30. Amgen's interest coverage ratio is a bit over 7. I'm giving this round to Amgen, but just barely, and it's based mostly on slightly faster growth. Let's start round 2. Regarding qualitative aspects, I see this as a close matchup. They're very similar business models with very similar competitive advantages and risks, but I do see one big difference. It's in their product concentration. Amgen has more breadth, which reduces patent cliff risk. There's less reliance on any one drug. Bristol-Myers Squibb's top 3 drugs account for almost 70% of sales. Amgen's top 3 drugs account for about 40% of sales. I'm giving the second round to Amgen, but what about valuation? Can Bristol-Myers Squibb eke out a round and finish strong? I see Amgen as the slightly superior business, and so it deserves a higher multiple. However, the multiple difference might be large enough to sway investors toward Bristol-Myers Squibb instead. Investors are clearly getting a cheaper stock with Bristol-Myers Squibb. Amgen trades hands for a price-to-earnings ratio of almost 20 right now. That's actually lower than its own 5-year average, and it's a lot lower than the broader market's multiple, so I do think Amgen is a very worthy long-term investment here. However, Bristol-Myers Squibb's price-to-earnings ratio, based on the midpoint for this fiscal year's non-GAAP earnings per share guidance, is less than 9. Now, this is comparing GAAP to non-GAAP earnings, and it's trailing 12 months versus forward projections. Still, the delta is large. If we want to bypass the tricky earnings comparison, the price-to-cash flow ratio for Bristol-Myers Squibb stock is under 11. Amgen's price-to-cash flow ratio is 13.4. Again, Bristol-Myers Squibb is just plain cheaper. Deservedly so in some ways, but one could argue the difference is too much based on pretty similar 10-year bottom-line growth rates. While Bristol-Myers Squibb takes the last round, Amgen won the first 2 rounds, so it's a 2-to-1 score for Amgen. That said, both are high-quality, investable, and buyable big pharma companies that will likely do very well over the long run. I'd be happy with either one, or better yet, both. One might want to tilt toward Amgen just based on overall quality and growth, but both could make a lot of sense for long-term dividend growth investors. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about this head-to-head battle. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.